We're going to bring in Robert Subbaraman, who's the chief economist for Asia ex-Japan at Nomura, right here in Hong Kong. Good to have you with us. I'm sure you paid attention to what Premier Wen had to say in his keynote address to the opening of the summer Davos there. I guess if you had to translate what he was trying to, an address to the global economy, what do you think he was trying to say, really?
Yes, there's been a lot of speculation whether China would come in and buy Italian assets. I think the message is that China's not going to be the white knight to save the problems in Europe and US, and really the US and Europe have to get their house in order. And I would say for Asia it's very important. There could be a tipping point where Asia gets hit hard again if the markets and economies in the West continue to slide.
So are you saying that this maybe gives the message and hinting that China is not buying Italian bonds?
I would say not buying,
right,
but I don't think it's going to be the savior to all the problems in Europe and the US.
Okay. What about China itself? A lot of brokerages have been rationing down their growth forecast for China. We heard Premier Wen saying it's tough for China to keep up these high growth rates, but he still sees China growing. What does that mean?
Well, I think it means we're most likely to see still pretty strong growth in China. We're forecasting over 9% growth this year, probably around 8.5% next year. And I think that's a very important support for Asia. We are seeing Asia so far holding up relatively well compared to what's happening in Europe and US.
When you say holding up, on what scale? Are we talking about equities? Are we talking about currencies?
I'm talking about the economies.
Okay.
The economies are holding up pretty well so far. We aren't seeing what happened in late '08. But there is, Susan, a tipping point where it can be either exports start turning down too sharply and firms start cutting jobs and capex. It could be the markets actually melt down completely and we get negative wealth effects. It could be capital starting to leave Asia in droves. All those tipping points can lead to nonlinear effects where suddenly Asia gets hit hard again. And that's what we at Nomura are watching closely. That's what would cause us to start to slash our forecast.
What about inflation? We heard from the Asian Development Bank earlier on this morning saying inflation is still going to be a concern for Asian economies through 2011, possibly into 2012. Do you think that's true, considering the global growth slowdown and commodity prices coming down?
I think for inflation, the tricky part is to distinguish the near term and the longer term.
Okay.
I think in the next 3 to 6 months, inflation is going to come off in Asia. We've seen commodities come down. Growth, it's not tanking, but it is slowing in Asia. So both those things point to lower inflation. Take China. We think Q4, we're going to have a 5 handle on inflation. And first quarter next year, a 4 handle. But looking further out, I think the thing that really gets me is just look at Asia relative to the West. We've got better fundamentals, higher growth, higher rates. I think at some point we're going to attract massive inflows again.
Yeah.
They might go out before they come in again, but at some point we're going to be standing, the relativities are getting bigger and bigger. And then we get all the stories about capital inflows, overheating, asset prices, inflation, commodity prices as well.
Those are growth problems.
So I think, ultimately here, central banks, it's tricky. In the near term, they have to navigate. They don't want to cut too much.
Right.
Because longer term, I think they're going to have to be on guard for inflation.
When you say cut too much, cut interest rates, because we've been talking about Indonesia looking to cut their interest rates. So what about Vietnam, et cetera, et cetera? Who do you think is going to lead the trend? Do you think we'll see an interest rate cut before the end of this year somewhere?
We could. Certainly we could. I think most central banks now, maybe except for Reserve Bank of India, are neutral.
Right.
And I think in Q4 we could start to see cuts. Maybe Korea or some of the ASEAN countries could be leading the cuts.
Yeah, Korea, because considering they had 4% plus inflation, it's coming in much faster than what the central bank wants.
On the other hand, their growth is actually quite weak.
Okay, so that's something to watch out for.
Robert Subbaraman, chief economist, Asia ex-Japan at Nomura, right here in Hong Kong. Rob, let's, you talked a little bit with Susan before the break about Italy and China, but, if China does come to Italy's help, what's in it for them and what's in it for the Italians?
Right. Good question. I'd say for China, if you think about the positives for China, I'd say one is that it's the second biggest economy now, and it wants to show that it's a responsible global stakeholder, and this would be a sign in that direction. I'd say the other thing is, does China really want, the risk here is we actually do head towards another 2008-09 style global recession. China doesn't want that, and so this would maybe at the margin help. I guess on the other hand, though, for China, it's done investments in 2008-09 that turned sour, and these are clearly very risky investments. And China's got a lot of its own problems, very high income inequality. How would it sell back home, actually helping Italy when there's still a lot of structural problems in China?
A property issue that they deal with right now as well.
Yeah.
You asked what's in it for Italy. Well, don't they get China's cash? I mean, isn't that what they want?
Then they also get a bond market, which people say, well, has a seal of approval as well.
A seal of approval.
And has liquidity in it, as opposed to being illiquid, too. Is that the case, Rob?
Well, I think the other thing that's, I think it's not clear at all is, there's a lot of talk about China buying bonds, but it might be that China is just buying Italian assets, hard assets, because there is a big privatization plan coming in Italy. So maybe it's more buying assets rather than bonds. I think the market might be it's not clear on that.
Like similar to when China bought up the Greek port that you looked at? Yes.
But this is, I mean, is this going to be enough to solve the debt crisis? China buying some Italian bonds, that's not going to solve Greece's problems. It's not necessarily going to solve this crisis of confidence. Maybe
it's not getting to the nub of the issue, isn't that what you're saying?
No, it's not. And that appears to be exactly what the European policymakers are, this challenge that they have right now. They keep overlooking the key issue.
Yeah, I think that's exactly right. I mean, China is not going to buy up massive Italian assets to solve the problem. It's not the white knight here. It's not the savior for Europe. And I think that was mentioned by China's leaders today, that Europe, US have to fix their own problems.
And in fact, Nomura, from what I understand, not expecting a double dip, right?
That's right. I mean, we're still of the view that it's not fantastic growth, but we still think there is going to be some growth in US and Europe.
Some anemic, like 1 to 2.
That's a good word for it, exactly.
1 to 2% growth.
1 to 2% growth for US, Europe on average. And for that, Asia's okay, because Asia's starting to rely more and more on China and domestic demand. It can hold up with that. But the tricky part is somewhere between 1 and 2, and then you get towards 0 and negative. Somewhere in between there's a tipping point where, bang, Asia gets hit hard again.
Yeah, Seb, you were talking about this earlier. Angela Merkel talking about that she does not want to have a Greek disorderly default. I think she used something like that term. But does that mean she wants an orderly default? And if we did get one, what would it mean for us here?
Yeah, I mean, that's right. She said disorderly, but nothing about orderly. Yeah. And, there's a lot of uncertainty about if that would happen and when that would happen. But I think even with an orderly default, it's the unintended consequences that we don't know. Even with an orderly default, what is the contagion risks to the bigger economies? And then it can quickly spread to the financial sector. So I think, even in that case, Richard, I think it's very risky at this stage.
What about stimulus? Were you going to talk about stimulus there, Zeb? You look like you wanted to jump in.
Well, we can take this in two directions. Just back to the Merkel comment very quickly. It seems she covers her bases here, right? She says we don't want a disorderly default, but of course it's not palatable for the German public to continue to throw money at this situation. So she's got both angles covered. On the stimulus side, you made a point earlier about these inflows. I wonder what risk a massive return of inflows to Asia could pose to this part of the world.
Yeah. Well, we could be back to like late 2009, 2010. Overheating, rising commodity prices, inflation. In that environment, we can't rule out that Asia starts imposing more capital controls, macroprudential measures. So it's a really challenging time for Asian central banks. I think right now they're neutral. The risk is at some point they might have to start to...
But does that mean that Nomura is factoring in, say, a QE3, another round of bond buying by the Fed? I mean, more stimulus coming from the ECB buying some of these Italian, Spanish bonds. What sort of stimulus has Nomura factored in?
We have. For US, we've factored in there is going to be the Fed, I think it's September 2021, is going to move to a new expansion. Well, the thing that it doesn't work much.
That's pretty emphatic, isn't it?
Who
does it work for?
You know what it does? You know where it does?
It does, Rob. It doesn't work very much.
It doesn't work that much, but what it does do is it leaks. And if you think they're going to do even more this time to have the same bang for their buck, the risk is we get massive inflows to Asia again. And that's why I talked about the overheating and the inflation, and central banks have to be on their guard.
Okay, but is it good for those in the Asia Pacific? You talked about overheating, inflation, but what about the good points of leakage here?
Well, the markets will like it. We'll get a very big rebound. But the risk is for policymakers that it starts to look unsustainable again because we get property markets.
It also looks like they haven't got a clue what they're doing. That they're doing the same thing over again.
Well, this is the challenge. I think bottom line here is Asia compared to the West is starting to stand out. It's so different in terms of fundamentals, growth, interest rates, and that disconnect can lead to massive volatile inflows and outflows.
Now, Rob, you used to work at Lehman Brothers. In fact, you were there in 2008 when we had the unfortunate bankruptcy of the bank. When you hear people saying this is like 2008 again, and BNP couldn't, well, for a while we had the story saying that BNP said that they couldn't borrow dollars, that credit window was closed to them. Doesn't this feel reminiscent of what happened just a few years ago?
I'll tell you what I feel really reminiscent right now is if you speak to people on the fixed income side, they're very, very nervous. The markets, the spreads, and things are very, very bad there. It doesn't seem as bad on the equity side, and that's very similar to 07, 08. It was really the credit markets that saw the pain and were really hurting first, then it transpired to equities. And I just wonder whether it seems a similar pattern right now.
Perhaps foreshadowing what's to come. We certainly don't want that. And it's important to note that BNP Paribas emphatically said, you know,
that's not true.
That's false. We can, you know, borrow in dollars, and then Soc Gen came out and said we don't have an issue with this. But you saw what happened to the French banking stocks. They absolutely tanked.
But if you have a look at European banking stocks overall, they were looking at 40% decline so far this year. I think the Société Générale is 55% down on its stock price. I mean, that's quite something.
Well, it's not just banks in Europe, but the U.S. You know, a lot of these brokerages have come in to downgrade estimates by 45% as a whole for the entire banking sector. That's pretty startling, don't you think?
Of course.
All right. So, do you have any good news to end on, Rob? Anything optimistic?
I'll tell you what.
Rugby on Saturday, isn't it?
Yeah, that's true. Australia will win again. But no, the good news, I would say, looking at Asia, is China and Indonesia, some of the bigger economies in Asia, are actually holding up relatively well right now. The data actually is pretty encouraging, and that's good news for the region overall.
There you go. Thank you for that, Rob. Good to see you. Thanks for that, Rob Subbaraman of Nomura.
Yep.